Hey there, welcome to my weekend webinar, regular event now, of course. I'm going to kick off with the stock markets. Well, actually, I'm going to talk about last week first. We talked the stock markets. I've been looking for them to recover, well, for the last couple of months, and obviously they've done really, really well, pushing higher again last week as expected. So everything's good. If you've been long these stock markets after my advice or suggestions or whatever you want to call them, then I'm sure you've done extremely well. If you're still holding the long, you are doing extremely well. It was a fairly obvious reason why the markets would turn around. There's your Dow Jones. There is your Nasdaq chart for the weekly chart. This is where I called the bottom, and we actually didn't quite hit my target in the Nasdaq, but I did warn that we might reverse just before it. Anyway, look again, Nasdaq pushing higher. Now, S&P is another good one. That's been really pushing higher as expected through the summer. Okay, now if you've been following me, I've been saying this for weeks. You're not going to be surprised to hear that. There are going to be some major developments probably this week. The stock markets, there are some real big signals coming out now, and I would normally tell you about this. And I'm sorry to tease you. If you're a subscriber, then you're going to know exactly what I'm talking about because you'll read it all in the report and you'll see my trade ideas. But I kind of have to be loyal to my subscribers because they do pay me every month, and many of them have been with me for years. If I keep giving all these fabulous ideas away for free, then they're going to desert me and they're going to be very upset with me. And so look, if you want to find out what's going to happen what I think is going to happen in the US stock markets and what the big opportunity is, then just go to my website, daytradeideas.co.uk, go to the menu, daily analysis and signals, and then look for the E-mini 500, E-mini S&P 500, DAX and Dow Jones futures. Look, it's 50 quid, not even 50 quid. Honestly, this could be a phenomenal investment if you subscribe to this, hear what I've got to say, read my trade ideas, because I haven't traded much this summer, I'll be honest with you. I've missed out on a lot of these moves. I've been busy with other stuff, especially with my kids, which are more important to me than trading. But I'm going to get back into it now because this is an opportunity that I'm not going to miss. Okay, enough of that. The dollar index hit a big support level down at 104.80, 104.60. I did notify you if you're a subscriber on the old Telegram channel. So hopefully you will have been aware that we were looking for a bounce in the dollar. We are getting it. Really nice move actually on Friday at last. We've got almost a tweezers bottom here. Almost, it's not quite. But we have got long lower wicks, bang on the fib level and the trend line. So we're seeing a recovery. We'll see how far it can go. We've obviously got to beat this trend line. It's a decent trend line. It goes back to the end of March. Let me move this up a bit so you can actually see what month we're in. There we go. So we do need to get the dollar up through 106.00 if we are to continue this rally. The odds are in the favor of the dollar because the dollar is in a longer term bull trend, and we just held a really important support level. So I would rather be long than short in the dollar right now. But of course, that we do need to get through 106.00 in the dollar index to confirm that. The Aussie versus the US is hitting a little bit of resistance, and having seen that, potential bullishness in the US dollar from that chart I just showed you in the dollar index, it wouldn't be a surprise maybe for the Aussie to turn around at some stage. Look, we're testing the 200-week moving average. This is not the best chart, I must admit. I can't put my finger on something and say, look at this. You've absolutely got to sell the Aussie versus the US dollar. But we definitely are hitting resistance levels. Bit of a contrast, though, with the New Zealand dollar, which actually looks quite positive for the start of next week. We had a really decent resistance level on the daily chart at around 64.40, 64.20, 64.40. Now, we stumbled there initially that was Wednesday. By Thursday, we'd broken through it. And by Friday, you can see that we're using that sort of 64.30, 64.20 area as a support level. Maybe this slow stochastic needs to be allowed to get into overbought territory because we are in a longer term bear trend, but maybe we're just not overbought enough yet for this to turn around with. So we're through the 23.6% fib. We have got a bit of trend line resistance, but I'm not actually going to pay too much attention to that. I'm going to focus on the daily chart, which shows the pair breaking above the 100-day moving average, the blue line, the short term 38.2% fib at 64.30, and I'm going to suggest that we've just got a little bit more upside there, and then I will see if the pair can reverse later on in the week. So keep your eyes out for my report later in the week and see if we can hit hit some of my targets, and then see if we get a sell opportunity. Now, this sure has been confusing. Euro versus the US dollar has been a difficult market. Look, all this sideways action. We've got a trend line that is moving nicely within the fib levels. If you've been scalping it, that's great. But I must be honest, you don't really need my advice to scalp something like that. All you've got to do is put it on your chart, put your fibs on, put your trend lines on, and just trade away. Now, it's getting a little bit confusing because we dipped back below what should have been a good support level about around 102.70, 102.60. We got as low as 102.38, I think it was, 102.36. Now, I don't know whether we've closed above or below that line, so I'm a bit confused. Obviously, when I show you the dollar index chart, it does indicate the dollar could strengthen. So maybe this is a false break. Maybe it's taken out some of the long positions, and then we actually took out some of the short positions here, and then of course we reverse back. I don't know. It's one to watch. 104.50, 104.40 on the downside. Break that, and I guess we're going to continue with the bear trend. But I'm going to have to update during the week with this one because we're just not getting a decent, strong signal that I would want to see. Even the weekly chart, not really respecting the levels, so it's a tricky one. Same can be said for cable, really, not really respecting my fib levels anyway. Maybe I've got them on in the wrong place. It's all about the trend lines. I suggested that this was a bull flag, or if I didn't suggest it last week, I suggested it during the week in my report. And we'd broken lower, so I was actually thinking, okay, here we go. But then this trend line caught the downside. Then we bounced to this trend line, which is the lower trend line of the bear flag. We've rejected that. I've left this trend line on here. That's a pretty tasty trend line. That's worked really well. So we're really just bouncing around within the trend lines. Now, if you've got them on your chart and you're scalping, that's great. But trying to find some sort of swing trade where I can run a position for a day or two or three, well, it's just not happening at the moment, is it? What's my take on it now? Well, we've rejected that the two trend lines that have intersected there. We've rejected that, which we were already heading lower, so that's obvious. I guess if I had to put a position on right now, I would probably sell, and I would look for the market to dip to this lower trend line, which is going to be in the low 119.00 area. Obviously, we're going to have to break up through last week's high at 122.76 to see something more positive, but we run into strong resistance at 123.40, 123.50, and if we were to get there, by the time we got there, this 100-day moving average would be adding some weight to that level, wouldn't it? So those are the levels. A bit wishy-washy. You know, the whole chart's a bit wishy-washy, isn't it? I could argue that we're building an inverse head and shoulders pattern, of course. Look at this. Well, I'm going to put this trend line on now so you can see it. Look, if you can't see it quite clearly, this could be the left shoulder, this could be the head, this could be the right shoulder. So a break above the neckline at 122.60, 122.70 could be quite a strong buy signal. But I'd need us to get through 123.80 to confirm that. But just be aware, there is a pattern there that could work. I'm not too keen on that because I think the dollar's going to probably strengthen. But, you know, I've got to point these things out to you and you can decide if I'm talking any sense or not. Yen pairs, there's a little bit more to go on. So this could be a head and shoulders pattern in the US dollar, US dollar versus the Japanese yen. Could be a left shoulder, a head, a right shoulder. We'll wait and see. We're holding the 100-day moving average really nicely, which comes in at 130, 135 right now, as I speak to you over the weekend. Obviously, the market's closed. We've got the 23.6% fib, which is at 130.70. Now, so this whole area really, it's quite a wide band of support. Or 130, 130 down to 130.13. Yikes, that's a 130 pip range of support. So this is what you've got to watch. I don't know which one of those are going to hold for sure, and I don't know if this is eventually going to break, but you know, we could be bouncing around from this support area up to 136.50. This is clearly the range that is being established at the moment in the dollar yen. So I would suggest trading that range and then wait for a break, either a break above, you know, the 136.5 area or a break below the 130.00 area. But I wouldn't hold on to a position for too long while we bounce around in between there. When we do get the break, it should be quite a nice move. Euro yen chart is a bit messy. Again, it's all trend lines. Nice bounce off the 200-day moving average. And then we bounced to the 100-day moving average of the blue line, overran it a bit, couldn't close above it. For me, the only trading level of the week for the euro yen is around the 138.00, 138.20 area because it's the 100-day moving average and there's a trend line there. Again, these charts are messy. Now look, this could be a huge head and shoulders pattern, couldn't it? This could be a big left shoulder, a head, double top head. I like, that's not uncommon in a head and shoulders pattern, double top head. And then this could be the right shoulder forming. So there's something to watch. We'll review it next weekend. Keep your eye on it. Neckline around the August low, which is around 133.5, 133.30. I know that you already know about this if you're a subscriber, because I posted this chart in the chat room, in the Telegram chat. But look, we've been in a big bull trend for the euro yen since, okay, that's gone back too far. We've been in a nice bull trend from second quarter of 2020. So I think that the head and shoulders pattern certainly works within the scope of the scale of things. But we're going to have to wait and see if we hold the 138, the low 138.00 area, and dip to the mid to low 133.00 area. In the meantime, it's all just a bit scrappy, really. I will post the minor levels in the report, but this is just a big sideways trend for the Kiwi, the New Zealand dollar versus Japanese yen. You can see we're testing trendline resistance, which goes back to April, so it's quite significant. I wouldn't say that that's a close above the trend line myself, but clearly holding above 86.00 is going to be positive. Holding below 86.00 at the beginning of next week is going to be negative. I can't really say anything more on that. If you look at the weekly chart, there's also another longer term trend line just coming in there as well. So we definitely are hitting. Look, every time we've got near this area on the weekly chart, look at these long upper wicks. Every time we've got near, what's this high? 86.81, 86.64, 86.59. We've got these long upper wicks, and of course we've got this long upper wick here. But that was the high for 2022. So someone's coming in there and selling quite heavily. So I wonder if we'll meet heavy selling pressure again. But if we start breaking above what was last week's high, 86.34, we start getting through 86.40, it's going to look quite a bit more positive, isn't it? We can at least test the high 86 area, and I wouldn't be surprised to see a retest of that 87, that low 87 area. So the trade ideas spreadsheet that I've published for today for subscribers is here. I have got lovely little index trades down here, which of course I'm hiding from you because I'm going to tease you. I'm sorry about that. But there are some decent trade ideas on there for the Forex markets. Now, gold. Again, another confusing market. I don't like summer markets. They're not always the best to trade, although actually, do you know what? By the way, Sarah, thank you for your message. Sarah wrote to me over the weekend and said she's up 60% this month already on my trade ideas. So, they are working, and there are some good opportunities in the market. But I'm looking forward to getting my teeth into September, October, and November, when I think there will be some real opportunities. And thanks also to you guys. Some of you give me some really nice comment and feedbacks and support in the comments box of last week's webinar. And I know that you're interested in this bot that I'm trying to build with a friend of mine to execute my orders on that sheet automatically. And I am too, because I can't be bothered to sit in front of a screen for 8 hours a day, especially after I've done 3 hours of analysis. There's more to life for me. So I'm really keen to get this bot up and running and have it executing my orders. I like doing the analysis. I like creating a spreadsheet, and I just want a machine to then go on and trade that. So when that is tested and up and running, at the moment it's looking really good. I mean, the results actually are way beyond my belief. After Sarah's comment that she's up 60% this month already, the testing of my bot, even just risking 1% on a trade, is already generating as much as 40% a month. I mean, it's crazy. That number sounds totally unrealistic. I know it does, and I'm not saying that it would do that every month. It may never do that again, but the results are pretty good. So the trade levels are really, really working even through this difficult summer period for you guys. And so anyway, again, thanks for all your comments and support, and I hope for you subscribers that you're making some decent money. Right, for gold. 1800 is my resistance level. Not the strongest resistance level, but look, this could be a bear flag. We are in a short-term bear trend. I say short-term, it's been since March. But, look, I'll go over this again. I repeat it almost every week, but in case you haven't seen this before, big double top pattern in gold, very negative going forward. Okay, maybe we're just in a sideways channel because the low here matched the 2021 low, which wasn't a surprise. Now, we have hit some trend line resistance here, so that's going to be important for gold. You know what level I've given you in the report anyway. And so this, that there's also short-term resistance around that low 1800 area as well, not from moving averages, but from what could be the lower trend line of the bear flag. and the very short-term fib levels, not the strongest fib levels, but look, you've got to be aware of them. And we overran 1800, the low 1800 area. Well, we got up to 1807, but there was only long-term trend lines at the time. It looked like we were holding the lower trend line of the bear flag. Now we've broken below it. Are we going to retest it? And are we then going to sink? Well, we could do, especially if the dollar strengthens according to what I'm thinking. Now, if gold does go higher, then we've got a lot of resistance around sort of 1825, 1835. We'll look at that next week. I'm not going to go into any detail on that now. Okay, silver, the resistance level that I identified at sort of 2010, 2030, that worked quite well initially. Once we broke above it, of course, resistance becomes support. We were buying down there at 2030, 2020. That worked really well. In fact, that was the exact low for the week once we'd broken above there on Monday. So the longs, it did take till Friday for the longs to work, I will admit, but a nice run up to 2086. That's my first target. It's an obvious reason. Just the 61.8% fib, bang on it. Nice close though. Close at the high of the day, maybe even the high of the week. It won't take much for us to break above 2090 on the open on Sunday night, and then we can push up to 2140, 2160, which is going to be a strong resistance level, but it's a nice target. So I think silver can push a little bit higher. Got a bit of catching up to do with gold anyway. Gold's been on a bit more of a rampage. So that is working nicely. If you're still running those silver longs over the weekend, I think you're in with a good chance. What I'd really like to see is a small gap open on Sunday night above, I don't know, 2080, 2090, 2088, 2090. That would be nice. Just a little gap would give me the confidence to think, right, here we go. We've opened above last week's high. I think silver's really going to push on. And I think that, so keep an eye out for that when silver does first open on Sunday night. Nothing really from the weekly chart. It's all on the daily chart. Let's have a look at oil. Got some nice levels in oil, actually. Giving way too much away again this week, probably. Okay, so we've got a nice resistance level around 95.50, 96.00, I'd say. Look, the 200-day moving average is catching it anyway. If you're trading oil, you've probably spotted that. We've got the 23.6% fib at 95.66, and we've got a trend line coming down here. So it's all, it's all intersecting around 95.5, 96.00. So that will be the important resistance area for oil this week, and nothing else really matters. Breaking above 96.50, we're off and running. Obviously, shorts at 95.60, 95.50, 96.00 will be wanting the market to return to the sort of 90 area and maybe even 87 area. Could happen. Crypto's got a bit boring these days, not really much happening. Trading-wise, short-term trading-wise, there are still opportunities, of course. The levels are holding really well. They always do in crypto. They really, really work. I get asked about this a lot, and I get asked about crypto in interviews. And technically, they do really work really, really well. I imagine it's a self-fulfilling prophecy, really, because what else is there to judge when it comes to crypto? Fundamentals, they're not the same as forex markets, where you've got government policy and economic policy and fiscal, what I'm saying, fiscal policy and macro policy and all the other things that can affect currencies. But here it's purely technical. So 100-day moving average, we're creeping up to meet that falling average. We've got a lot of fib resistance around 24,600 up to 24,800. That is going to be the big level for Bitcoin. If you're trading Bitcoin, or if you're invested in Bitcoin, you really need this through 25,000 quickly. But this really, unfortunately to me, looks more like a bear flag, which is a negative pattern. Anyway, as I say, get through 25,000 and you're holding Bitcoin, you're laughing. We could push up to 26. We could get up to 28, 29 even. I mean, I'm being a little bit optimistic there, but I'm trying to give you something to hold on to. It's not out of the question if we can get through 25,000. What would I do? I would probably short here with a stop above 25,000, maybe even 25,200, because I favor the bears. Now, having said that, Ripple also is holding resistance levels, as you're going to see in a minute. There you go. Well, we're breaking above the 100-day moving average, but we're not really getting much of a reaction. With the fib levels are still holding. This is just a bit wishy-washy. It's just not really going anywhere, is it? Let's have a look. What kind of trend line can I put on there? Does that work? No, that doesn't work. I'm going to put this trend line on from here. there. Okay, there you go. So that's the upper perimeters of the sort of channel that we're in. 40, 35. We need to get through there, and then I could feel a bit more bullish about Ripple. But if we hold above sort of 37.5, 37, that is actually pretty positive, because that is becoming a support level as we hold above the 100-day moving average. So bears, you need it below 36.00. Bulls, you need it above 40.00. Now, Ethereum is actually pushing higher, and that actually looks quite positive. We've broken any resistance levels of any importance, and we're really motoring. So I think we can get up to 22.30, 22.50. That's the 200-day moving average. There's nothing really in the way. I don't think there is on the weekly chart either. Let me just check for you. No. Look at that. That would be nice. 22.50, 2300. What does that look like on the daily chart? Yeah, look. 22.50, 2300. Okay, that looks like a reasonable target for Ethereum. If you're holding it, I reckon you've got another 250 to 300 pips profit on the way there. It looks pretty good to me. Whether it drags up the other two, I don't know. Okay, I'm absolutely itching to tell you what I'm seeing in the stock markets, but I'm going to hold myself back, and I'm going to ask you to subscribe to those markets if you want to find out. If you're a subscriber already and you've got any questions about what I've put in the report, please do contact me. Please like, share, and do all the usual stuff. Subscribe for me on my YouTube channel and help me out with that. And please do comment. Love your comments. I need your feedback, especially when you tell me how wonderful I am. I really love that. Okay, that's it for this week. Yeah, I think that's it for this week. Contact me if I can help you, obviously. Leave a comment if I can help you. And that is it. Good luck in the financial markets this week.